Have you ever heard about COT Report? In this video I will show you how to use this special report created weekly by the Commodity Future and Trading Commission in order to make profit on commodities. We will use sugar as an example.
Sugar is in a very interesting situation because, as you probably know if you follow Forecaster since a while, we have the COT report inside the Forecaster terminal. COT report is something really interesting because every week the Commodity Future and Trading Commission publish the commitments of traders. This is a report that was created in order to help the public understand market dynamics. And every week you can find all the positions of institutional investors for all the commodity, all the currencies, and all the futures listed on, for example, the New York Mercantile Exchange, the CBOE, and all the other stock markets. Okay, and you have all the long and short position divided for category. So we have the commercials, we have the non-commercials, which are the speculative traders. Of course, in the forecaster, you have all the definition, because remember, the forecaster goal is not to provide you with a buy or sell, but we would like to give you an information you can trust and you know from where it come from, okay? And regarding commodities, what I realized using the COT report is that we have this special category, which is the producer and the merchant, who are the guy who produce, in this case, the sugar, and they sell the sugar. Okay, so these guys knows exactly, okay, these guys knows exactly how much does it cost to produce the sugar in this case, but it works with all the other commodities, and they know how many orders they have for these commodities, and in general they use the future contracts in order to protect from volatility. What does it mean? For example, in this case, the end of 2023, if a producer creates some sugar, okay, when he have the sugar in his hands, okay, when he start to create the sugar, he goes short with the future in order to freeze the price, because he will probably sell the sugar and he will get the money maybe in 2-3 months. Okay, so in general, producer and merchant use the future contract in order to freeze the price. They are always short, okay, because they don't want to speculate, but they just need to freeze the price. Okay, sometimes happens that they are not short anymore, and sometimes happen they go long, and this is exactly what is happening now with the sugar. So I would like to 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 give you to tell you that the sugar probably can skyrocket in the future, because who is producing the sugar is betting long as they never did in the past. Because look, if we go to and we analyze all the data from the COT report since the 2008, they never went long as they are today. So I really think that sugar can really skyrocket, okay? And also, if we go here to the overbought and oversold chart, we can really find that while the prices went down since the middle of December, the Wyckoff indicator went up. And this means that the number of buyers are increasing even if the prices went down. Exactly the opposite of what is happening on Tesla. Okay. So very interesting. We also add here the chart colored in green, which means as you can see here on the description of the advanced DPO, that prices are statistically speaking very low. And so that's it. This is something I would like to share with you because sugar probably can really skyrocket. And if we go to the seasonality page of the sugar, as you can see, the actual price is very highly correlated with all the seasonality, okay? And as you can see, starting from the end of February, the beginning of March, we have a very bullish period, okay?
If you like this video, feel free to try the Forecaster terminal for free. You can visit our website. You can find the link in the description. And remember, you can join our weekly webinar where we share our best trading and investment ideas. You can find the link in the description too.